Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 17th of May 2021, and we're pleased to report that the media and analysts are at last started to get excited about gold and precious metals again. So let's take a look. Now, earlier today, we published a video entitled Bitcoin and Cryptos Crash Thanks to Elon Musk. What is going on? And yesterday, we published our gold and silver weekly update for the weekend in the 14th of May. And we've placed links to both of these in the description box below. Now, this morning, there's some exciting news, or at least potentially exciting news for precious metal investors. At the time of writing, gold stands at $1,852, up $8, and silver $27.71, up 26 cents. And Bloomberg is reporting that we may very well see some renewed confidence in precious metals, perhaps especially as cryptocurrencies appear under pressure. We've often said that to some degree, not totally, but to some degree, cryptos have perhaps mopped up a reasonable amount of investment monies that would traditionally have gone into the precious metal markets. So let's take a brief look at the Bloomberg article and also at precious metal prices, including platinum and palladium, and a brief touch on Bitcoin, and then we shall comment on it afterwards. Bloomberg article dated 17th of May 2021. Headline: Gold hits 3-month high as speculators increase bullish bets. Gold rose to a 3-month high as weaker bond yields added to the metal's allure, amid signs bullion investors are turning more positive. Hedge fund managers increased their net long gold position to the highest in 3 months, data showed on Friday. Meanwhile, data compiled by Bloomberg show exchange-traded fund investors have bought bullion for the past 6 days, following months of sales. Prices have rebounded from lows set in March as the dollar retreated and the Federal Reserve signalled it will keep interest rates low amid an uneven economic recovery, even with rising inflation expectations. Gold edged higher Monday as Treasury yields extended declines in the wake of Friday's US retail sales data that missed expectations. Gold has been out of favour for a while, but the uptrend during the past 6 weeks, combined with rising break-evens and lower real yields, have supported renewed demand, both from money managers in futures and from investors in general through ETFs, said Ole Hansen, head of commodity strategy at Saxo Bank AS. Spot gold rose 0.5% to $1,853 an ounce by 10 a.m. in London, after reaching the highest since February the 10th. Silver, platinum and palladium also gained. The Bloomberg Dollar Index or Spot Index was steady. Gold's gains have taken it past its 200-day moving average. Prices could climb to $1,878 if it surpasses resistance at $1,858, Hansen said. That's the end of that article, but we shall take a quick look at bullion by post, where we can see, if we have a quick look today at the gold chart, let's get rid of this, we can see today, there we go, we can see gold has immediately risen, starting at $1,844, peaking up here at $1,855, sort of dipping slightly now as at 10:30, that's GMT +1, that's the time here in the UK. So it's up nearly $7 so far. If we look at silver, I think we see a similar rise today, percentage-wise, and we can see silver rose. It dipped suddenly, but then has really recovered and I won't say rocketed because it's not enough to be a rocket, but as far as the chart is concerned, has rocketed. And we can see here that it's dipped again slightly at the moment, but we have a positive 23 cent gain. quick look at platinum for today, and we can see, let's do it in dollars, not pounds. This is very similar to the silver movement as opposed to the gold movement. And palladium for the day, we can see that palladium again quite similar to the silver movement, but it's up and down, and it's up $6 at the moment, $2,911. For those interested in briefly in Bitcoin, but we talked about that earlier today, we can see it's down $13,000 on the week, and for today, yeah, it's still down $4,000. It's up from its low at 42,000, so it's up to 44,917. I think it was 44,800 when we produced our video earlier this morning. But we can certainly see the decline, and if we look at the 3-month chart on Bitcoin, this isn't about Bitcoin, you can see the gyrations there, but there's definitely a downward trend going on there. Looking at gold over a 3-month period in US dollar terms, we can start to see now this gradual pickup, perhaps from the end of March, and we're getting higher lows and higher highs. And looking at silver on the 3-month chart, this is not scientific, it's just to give you a brief overview. Again, going from the end of March, we're seeing a very similar position. So, events do indeed look most positive, and currently we can see that the dollar index stands at 90.29. That's down just 0.03 so far on the day. Now, we also came across, in fact today we noticed it, an interesting article on Bullion Vault, which was published last Friday, which we believe is also worth covering, which we shall do now, and then comment on that in totality. Bullion Vault article dated Friday the 14th of May 2021. Headline: Strong inflation plus weak US growth bodes well for gold, near 14-week highs. Gold prices rose today, this was Friday, back towards last Friday's 14-week high ahead of the benchmark London fixing, trading $2 above that level at $1,838 per ounce, as new US data said the world's largest economy is recovering much less quickly than inflation in the cost of living. The economy is ripping. It's going gangbusters. Pick your favourite metaphor, said Federal Reserve policymaker Christopher Waller in a speech Thursday. But we need to remember, he said, that it is coming out of a deep hole, calling the current spike in inflation transitory, and also repeating the Fed's official line that highly accommodative monetary policy still has a way to go before we fully recover. Global stock markets extended yesterday's rally after losing 2.8% in a week from new all-time highs on the MSCI World Index. Major economy bond prices also steadied on Friday, edging longer-term borrowing costs down from Thursday's 2-year highs for the UK and Germany. Inflation-protected US Treasury bonds, meantime, showed a yield of minus 0.89%, reversing this week's earlier rise of 4 basis points from last Friday's 12-week low. Week to week, gold prices have moved in the opposite direction to 10-year TIPS yields 2/3 of the time across the last 5 years. So far in 2021, and on a rolling 22-day basis, gold's average correlation with 10-year TIPS yields is almost as strong as minus 0.59, as its positive correlation with sister metal silver of 0.60. And you can see that on the chart here. A reasonably strong correlation between the two, says precious metal specialist Rona O'Connell at brokerage StoneX. The real 10-year yield is negative and is not going into positive territory anytime soon, especially if the Fed has its eyes on the long end of the interest rate curve, having alluded to the possibility of yield curve management. Most certainly, O'Connell adds, the Fed is not going to throw the economic recovery off course by raising nominal rates to a level whereby the real rate turns positive in an inflationary environment. and that bodes well for gold. After last Friday's jobs data for April came in way below analyst forecasts, this week's consumer price and factory gate inflation figures both blew past predictions to give their fastest headline readings in 13 years. But retail sales today showed a surprise drop for April from March, down by 0.8%, excluding auto sales, while industrial production missed consensus forecasts of 1% growth by almost 1/3%. Concerns of rising inflationary pressures, says the Asian trading desk of Swiss refiners and finance group MKS PAMP, plus a broader risk of tone across markets, saw the precious metals push higher yesterday. Thursday's higher factory gate prices in the US saw the dollar weaken, while bond yields also slipped and helped investor demand in the sector, with gold rallying as it also found some support, wait for it, from Chinese investors. Chinese gold prices today fixed at 3-month highs above 381 yen per gram in Shanghai's wholesale market, even as the yuan pushed higher towards January's 2.5-year peaks versus the dollar on the currency market. Together, that spiked the Shanghai premium, meaning the gap between prices in China's gold #1 consumer nation and in its global trading hub of London to $15.75 per ounce, the greatest one-day incentive for new bullion imports since May 2019. COVID hit India. In contrast, has seen gold demand collapse this month, with jewelers in the metal's #2 consumer nation missing out on $1.3 billion of sales for this week's Hindu festival of Akshaya Tritiya and the Muslim festival of Eid, according to the Confederation of All India Traders. A look back at this article is indeed interesting, and perhaps it could prove to be a little prophetic. The US will find itself at some stage in a conundrum, with inflation continuing to rise, but the economy as yet still way off its pre-COVID peak, and the pressure therefore on the central bank not to raise rates when traditionally it would or should will prove considerable, and thereby provide investors with negative real interest rates, which historically has proven good for gold and precious metals. We wanted to share this potentially good news today, and for those considering investing again in precious metals, this may not necessarily be a bad time to do so, of course always following our caveat, invest for the long term, particularly as the dollar is kept relatively weak and interest rates in check. What do you think? Do share your thoughts. Meanwhile, thank you so much for listening, and if you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.